I hope you enjoy that song. That song gets, it's on repeat. If you join the YouTube live, it's on repeat. Just so everybody knows, I had a great meeting with Substack yesterday. If you didn't know, on the link tree, and you can see it right down below, there is a link to Substack. Okay, it's dailystockpick.substack.com. It is the newsletter. I had a great meeting with them yesterday. Thank you for meeting with me, first off. I'm going to go live. So if you don't have the Substack app, I would suggest getting the app. I also confirmed that the stock price, there were a couple of paid members on Android. We don't like Android around here, but they complained when I typed in the $sign next to the stock symbol that it wouldn't show up. I confirmed it does show up now on Android. So I met with them. I'm going to go live. We talked about doing live through OBS where I can share charts and stuff with the live folks on the Substack app. And yes, right now it is only in the app I can go live. But I figured I'd help them out with the newsletter portion. We're going to test some stuff. I can maybe do charts above my head. But since it's going to be on a phone, it might be small. It might be better for me just to go live and you guys ask questions and then I can share charts out in the chat or something of that sort. So I will be doing that. I'll have news about that, but go and sign up for the newsletter. Yesterday, what can you, it doesn't look great. There are definitely a few highlights in here, like Nvidia up 2.25%. Like Micron, up 0.65, holding on to that 100 like it's dangling over a cliff. Eli Lilly up 1.27. And then you got the lowlights. You got Google and Meta. You got Amazon. You got Tesla. You got Walmart. You got Apple. You got Microsoft. You got Adobe. You got Palantir down 2.5%. In the energy sector, you have NEEE. You have Duke Energy. You have Southern Company. You have Dominion. You have a lot. Then you have up here that was the utility sector. In the energy sector, you have Exxon. You have Chevron. Exxon hit a 52-week high. Stock struggled on Monday as rising oil prices and higher treasury yields weighed on the market. The 10-year treasury rose more than 4 basis points to 4.02. Okay, 4.02. That marks the first time since August that the yield topped 4%. Oil prices also rose as tensions in the Middle East remain high. U.S. crude oil climbed more than 3% to settle at $77 per barrel. That's going to like to be at $80. Okay, if you want to know where the price of oil is, and because, again, bond rates and oil indicate inflation stuff. Crude oil's at 75. It's down 1.75. You can go on to Finviz right here in the bottom left. It has the price of oil down there. I don't know when they update it. I don't know if it's updated real time, but you can keep an eye on it. If you want to keep an eye on it and Seeking Alpha, you can go over here to market data. And everything that you need to know is in market data. Okay, commodities. There you go. Oil, DBL. You can see what price it's trading at. Relative. You can chart it out here. You can see everything that you need to see on Seeking Alpha. But if you don't have Seeking Alpha, Finviz is a great tool as well. Now, the 2-year and the 10-year, the inversion, that's important. The 2-year and the 10-year yield inverted again. And so when you get that yield in curve, it indicates a recession. A recession is, this is usually followed by a recession. I'm in the soft landing camp. I'm not in the recession camp. I'm not necessarily worried about it. But that could have been the buy the dip moment yesterday. You were down a couple of percent. It could have been the buy the dip. So let's take a look at the charts. Right now on the MACD, looks like you're just kind of floundering. Looks like the MACD line is below the signal line. The algorithm doesn't have you out. It got you in at 468. You're at 482 on the Qs. We can look at VOO, which is my preferred buy and hold ETF for the S&P 500, just because SPY charges a slightly higher expense rate. You're down below the 9-day. Algorithm had you in at 512. We're at 521. In pre-market, you're at 523. The RSI is at 49. The last time we had the dip, it got down to 33. The previous time we had the dip, it got down to 29. Again, that's on the 4-hour. You go on the weekly chart, and we're still positive. You know, the RSI is at 62. The MACD is super high, but you have a spike in volume. And that spike in volume typically means that money's coming in from the outside. So, again, I don't know if this is going to be a buy the dip situation. Let's take a look at the VIX. We can go over to Seeking Alpha and just type in VIX. You're at 22. Like I said, it wants to live at 20. In pre-market, you're down 2.83%, so the market will be up. Remember, the VIX is kind of like an inverse. It doesn't happen all the time. It measures volatility. So if the VIX is up, the market most likely, not all the time, but most likely will be down. If the VIX is down, most likely the market is going to be up. You can trade the VIX with UVIX and SVIX if you want to trade it. But again, with the 2 and the 10s, you're going to have volatility. So I don't know if it's by the dip. Like I said, XOM, all-time high. Shares of Generac soared. Insurance stocks fell as hurricane. We have a hurricane hitting Florida. Okay, second hurricane in what, 2 weeks? There are going to be, not only human projectiles like in every other hurricane, but there will be, debris projectiles. So, biggest stock movers yesterday, SMCI. They released a successful deployment of 100,000 GPUs with its innovative liquid cooling systems. It soared. It was 15%. Okay, it was up 15% yesterday. Today, it's up 4%. DocuSign jumped 6%. ISOL got out of that one at like 58, 59, 66. It soared yesterday. It will be added to the S&P mid-cap before the market opens on Friday. Biggest losers, China. We will go over China. I thought this was super, super entertaining, by the way. The myth of cash on the side. This is a Josh Brown and Friends, The Compound and Friends, with Sam Rowe and Dan Greenhouse. I will bookmark it in the newsletter. It is at the 48-minute mark. It is a hilarious talk about China and why what the stimulus that they're proposing is not similar to the stimulus that we have here. So, they're very bearish on this kind of thing. They're probably in the camp of you can trade it, but don't buy it and hold it kind of thing. So I wanted to take you through some things here, specifically on Finviz. Okay, I took screenshots of this and I posted it on Twitter. But what I wanted to do was, and I just used the filter. I said, give me the top 10 S&P stocks. I filtered by S&P 500, and then I just took a screenshot of the top 10, and I sorted it by change percentage. You can see number 1 is SMCI, number 2 is APD, number 3, Generac Holdings, number 4, FANG, Albemarle, Nvidia, FICO, Pfizer, Hub, Walgreen Boots, okay? That goes all the way from 15% to 1%. When you start to 11, it starts turning negative. So that's the first one that I got. The second one that I got, I did it by the bottom 10 because these, again, any reaction in the market may be an overreaction. And you can see Everest Group, one that's in here, VST. Okay, let's go look at VST because this one has been a super high flyer. And where's it at today? It's down 1%. You can see the button hook's happening. If you don't know what a button hook is, go and check out my newsletter. Okay, I have the full description of what's in there in the education section. Go to dailystockpick.substack.com. But VST turning over. I would expect this one to turn over. I would expect that one to be down. Let's see, yesterday it was down 5%. I would expect it to be down again today. It just is too expensive. Buy it on a pullback. I said yesterday, it's one of the stocks that I would buy on a pullback. There was a second stock within VST that I found in Seeking Alpha that is less expensive, that has had the same kind of run, but the valuation makes sense. Go and read the newsletter. It's on the weekend newsletter. Allstate, DEC, all of these insurance companies that are going down, they're going down because of Milton. So, but again, that's 8% to 4% down. Then I went through and I sorted it by market cap. Okay? I think this is volume. I went by volume. The next one was by volume. So what are the most traded stocks in the S&P yesterday? It's Nvidia, It's SMCI, it's Tesla, it's Intel, it's Pfizer, it's Palantir, it's Amazon, it's Apple, it's AMD, it's Ford, it's Carnival Cruise Line, it's Bank of America, AT&T. These are the things that you can gain from using Finviz. Again, Finviz is 100% free. There is no charge for this. This is all data that you can use to try and manage your portfolio or find additional stocks that you like. And then I finally did this one. This is by market cap. So if you want to see the largest market cap stocks in the world, it's Apple at 3.3 trillion. It's Nvidia at 3.1 trillion. Nvidia is still going up. So that one's going. Microsoft is going down. They're at 3 trillion. They might be under 3 trillion. Then you got the two Googles. They're at 2 trillion each. Yeah, peace. I don't know why those damn balloons come up when I put I think it's the FaceTime stuff. It's Apple. You're welcome. It's a party. It's a Google party here. But yeah, you've got two Google market caps of $2 trillion. There you go, $4 trillion. Amazon and Meta and Berkshire and Lilly and AVGL. It is the core portfolio. Again, I am a a large cap tech investor. So you will see most of these in the core portfolio. But again, that's how you use Finviz. You can sort those things on a daily basis to take a look at those things. Now, Supermicro, we talked about it. 100,000 GPUs. It's up 15% yesterday. It's up 5% today. This is a stock that I did take out of the core portfolio, and I did time it at the bottom. There is no reason that I can't get back into this when it shows us that it's going. This gap, okay, this gap up here between 49 and 54, you're at 50. You've started to fill it. Want a nice little 5-7%? It will fill this gap. It absolutely will fill this gap. There is enough hype. If you buy it right now at $50, it will fill this gap. Okay, at some point in time. Now, the RSI, super overbought. It's at 64. It's been here before. When you take a look at this, this is now support. So this trend line, until it's broken or shows us a new trend line, if we go in here and we want to do a short-term trend line, I can look at the support. We can go on this low one. Doesn't have a ton of support, but if you think that that was the low, then yeah, we're using this as the high. When will it get to 55? Right before earnings. 54, 55, right before earnings, if it stays on that trend line, or it could break out. But if it uses this trend line as support, it will get there around October 30th when they report. I don't know what they're going to report, but if they don't address the 10K, I think you're screwed. Honest to God, I think the market's going to say, you know what? They didn't address the 10K. Yeah, they have 100,000 units, but they didn't address the 10K. So again, it's a risk. That's why I took it out of the portfolio. It doesn't mean that it can't go up. You know, VST, one of the biggest losers yesterday. We can look at that stock. VST, we talked about. VST, how it was one of the biggest. Look at how it ran up. Amazon, Apple, and Netflix all got downgrades yesterday and were down by 2% or more. Doesn't mean you can't buy them for the long term. One of the things that I want to do is show you how Apple buying back $10 billion worth of stock in a year could boost the share price. It could boost or hold the share price, even though the share price might go down if they didn't do it. So the ironic thing, when you take a look at SPY, I think this is important. When you take a look at SPY, the 570, okay, what was the high back here? It was 567. What do we seem to be using as a support right now? Okay, even through all of this downturn that you've seen in August and September, the August, it looked like we used it as here in September and here in August, we use that as resistance. Old resistance becomes new support. What do you see on this 4-hour chart right here? If I just zoom in here, you can see that was the July highs. We used that as resistance right here back in August when we came off that low. Okay, down here when we came off this low in September. We didn't really use it as resistance for a long time, but there were a couple of days and then we broke out. Now, what have you been doing since October 2nd? You've been using this as support. Is it enough support to actually say, oh my God, we won't break through? No. But if you're buying for the long term, That's the kind of thing that you want to look for. And so it doesn't matter that you're buying at 567. If you're going to look at this bottom one at 509, you would add more. So if you want to put $10,000 into the S&P, put $1,000 in today at 567, at 569. Just put $1,000 in. Buy it in increments. And that's how you dollar cost average your way in, even if it's going down. I don't see a major downturn in play between now and the end of the year. Doesn't mean it won't happen. Nobody can tell you for sure. I had a discussion with somebody last night on Instagram, and they said, I have a surefire way to make you 0.5% in the market every day. Every single day you will be 0.5%. I said, not going to happen. There is no surefire thing in the market. Nothing. There is nothing in the market that is guaranteed. That is the great part of the market. And even sharing out my 4-hour algorithm, which I do, will at some point in time, when enough people get that, will make it impossible to make money. But trust me, you ain't gonna. I'm not gonna make it that popular that it's going to move the markets. But if you do want the 4-hour algorithm, it's up here on Linktree, and then you get it for $53 a month. You go back to the Linktree and then email me once you sign up. But again, SPY, it was interesting yesterday. I thought it was interesting that it was pulling right back there. SMCI surged. Part of the reason Nvidia and SMCI are up, there was news yesterday at overnight. Foxconn is building the world's largest Nvidia super chip factory. That's huge. That is enormous. And they're saying the demand for these GB200 chips is out of control. They're building the largest plant. Okay, this is about Foxconn, but it's about Nvidia. What will they need? They will need racks, cooling racks, SMCI. What will they need? They will need the Nvidia chips. So again, there's huge demand. We've heard about this. If we look at Nvidia, Nvidia is up again, I think 2% today. I said buy this one between 100 and 120. I said this was your buy range. We've broken out of it. Have we used this 123 as support level? No. But in my mind, I don't think you're playing against trend to buy this at 127. I think, or 129 in pre-market. It seems a little bit crazy, but if you got to go to work at 9 o'clock and it's 8 o'clock right now, and you're going to forget to buy this, it's not crazy. The valuation is not nuts. It's not. If we go and look at Nvidia here, it is a hold in the quant. Okay, the quant says it's a hold. It's been a hold ever since 131. So I've been holding. I've been adding a little bit, like 1 or 2 shares. It's not a lot. I haven't been adding. But when you go and you look at the valuation, remember we talked about how Apple is at 30 times earnings, but their growth is not great. Look at the PEG ratio. Okay, they're still growing. What did Jensen Huang say just last week? The new Blackwell chips, and demand is insane. So, again, go and read this one about China. I thought that was great. We will look at YINN and YANG when we get to our scans, because one of them actually has an entry today, and it's up 35%. But go and listen. I thought this was hilarious. It's like a 2-minute thing. I think it's actually very good. Uber. Well, let's talk about first, before we get into Uber, FXI. We want to look at FXI. We talked about FXI as being the ETF that actually holds the Chinese versions. This one is down 10%. It's at 33. So let's take a look at 33. What is 33? That $33 right there, that was identified as a resistance level. It's now turning to support. Okay, right now you're trading at 33. The pullback, if we hold 33, that would tell me, okay, this is on a weekly chart. If you hold 33 as a low for this week, that to me would indicate it might be a good time to buy. Again, David Tepper, smarter guy than I am, knows China. He said buy everything. If we pull back and hold 33 on this week as the low, I think next week you could buy, because there's a lot of time to get back to this 53 right here. And if this 50-day is going to continue to turn And that 200 is going to continue to turn. And you can use 33 as your support level. And investment in FXI makes sense. That's how you use the chart. That's how you use these support levels. How did I get that 33 support? Well, back here in January when we popped up, that was the previous high. That was the previous high before it slid down. Okay, right now, there is no trend line off of this high. There is no trend line off of this low. If you want to do a recent trend line, you'd take it off this low, and then where would you put it? You would put it right there. That is a significant decline. Okay, a significant decline. But if you're looking for recent support levels, I would say that's the support level. You can go to YouTube. Look at how to draw support levels, trend lines, things of that sort. It's all free out there. You don't need to pay for an education. You know, I can do the education for you, but honest to God, there are so many more people that are better trained. I am a mix between a fundamental and a technical trader. I am not 100% technical. A 100% technical is Jason from Trendspider. That guy doesn't care about the fundamentals whatsoever. He just trades based on the charts. That's it. Different strokes for different folks. If you want to take it back to the hippie 1960s. But yeah, let's talk about Uber, because I thought this article was super, super impressive. This is why Uber is in the core portfolio. This is why Uber is trading at 75, and I got rid of it at 70. Okay, EV commitment through new AI assistant, expanded platform, and pop-up events. They are continuing to innovate. They are continuing to do things that their customers want. They're not sitting back and saying, you know what? We're Uber. We've got the biggest platform that there is. They're continuing to license out self-driving, which is going to be their biggest cost saver. They are continuing to invest in their current platform, which is the drivers. And they are currently investing in AI to make it better for the consumer to get the car that they want when they want. And that is a company you want to invest in. Okay, in the core portfolio, we can take a look at it here. It's at 75. What have I identified as the previous high? 82. Okay, if you want to invest in this one at 74, your support line is going to be 61. Because that's where we pulled back to, okay? Ignore this August 5th where the Japan unwind trade came in and you had a great opportunity to buy it. Ignore that. Ignore this gap, because I don't think that we're getting back to 58 on this one unless something crazy happens on their earnings on October 30th. But I wouldn't expect it. Their CEO is fantastic. I can't imagine something crazy goes on. But Uber, I thought this was interesting. Now, Netflix had a downgrade yesterday. We can talk about Netflix. Anything under $700 in Netflix, I think, is a great buy. Why? Well, we're using that as support right now. 700 is the support. If we break down and it goes under it, I think you can start a position in this one. Is it crazy valuation? Yes, it is. When you look at the valuation, it's trading 36 times future earnings. But when you look at their growth, the PEG ratio is 1.34. That's not great because they should be growing more. But when you look at their profitability, their gross profit margin, 43%. Okay, return on assets, 14%. They're doing a lot with their money. Leveraged free cash flow, trailing 12 months, 55%. They're doing very, very well financially. Revisions from analysts, 36 up, 3 down on earnings per share, 18 up, 20 down on revenue. That's going to be the problem, is continuing to keep that revenue up. The ad tier is working. The password crackdown is working. I just think that this is a good one. In fact, here's a good article. Bulls versus Bears, Netflix downgrade to sell equivalent at Barclays while Piper issues a raise. We can talk, that's a great article because you can read both of those. I'm going to put that in the newsletter for you to read. So I think that one's an interesting one. Now, let's talk about the Uber AVGL. There's a great chart that I'll post in the newsletter. Again, it's from Trendspider, but I wanted to show you this one. We're going to go to a daily chart, and we're going to bring this back because we're going to show the recent highs right here and the recent lows. And I'm going to show you how to draw this trend line, and I'm using Trendspider's chart as a guide. Okay, so we're going to draw this support. You know what? We'll draw this as resistance. We're going to take this from July 2024, and we're going to take this down, and we're going to say, okay, we're touching 3 lines because we want to see, is that actually support? And then you take a support line and you say, okay, we're going to go from here and we're going to just draw it 2 lines, which is kind of the 200-day. And if those 2 lines intersect here at the next earnings on December 4th, if you start to use this as a support line, and it's a bounce, we could be going to all-time highs. So that resistance level that we talked about with previous all-time highs, which is 184.30 right there, and you're trading at 175, the upside is not there to go at it right now. You want to see that it breaks through this, okay? If we are going to use this one from the previous highs as a support rather than a resistance, because again, you use it as resistance here, semi-resistance here, and it's probably not drawn perfectly, but I will post the Trendspider chart. If you are going to use this as support right here and it breaks through that 185 level, it could go. Now, I will argue as well, I am a current holder of this at like 130 something, I think, is my average price. The valuation is crazy. The valuation is nuts. 36 times earnings. Their PEG ratio, 1.89. There are better options out there. Wall Street, because there's Wall Street analysts out there, they say it's a 191 price target. There are 42 analysts that cover this one. 191 price target. Seeking Alpha analysts, they rate it as a buy. There's 15 analysts that have covered it in the last 30 days from Seeking Alpha. This is why I have Seeking Alpha. You know, we can talk about Seeking Alpha all you want. It is the third link down here. If you want just Seeking Alpha, it is $30 off and a free 7-day trial. Okay, you click on that link, you get here, you sign up, free 7-day trial. And the reason I have Seeking Alpha is I don't have 40 analysts working for me. And I don't want to go out there to Finviz and read 90 different articles of people who are talking their book because they invested in something. These analysts are paid to actually do an analysis. They may be talking their book, but you have the opportunity to read their article ad free. And it's great. Okay, we'll talk about in the best opportunity right here, the premium and Alpha Picks. Alpha Picks is a curated portfolio of 2 stocks per month, once on the 1st, once on the 15th. The difference between most services is they don't just give you the pick and then leave. They tell you when to sell. They also give you monthly portfolio updates, and they do it via what I do, podcasting. They do a video update. They have a nice Zoom meeting that you can hop on and you can see what they're actually doing. And they talk about their portfolio. They tell you when to sell. So if you want both premium and Alpha Picks, you save over $150. Okay, you save over $150. You can see premium's $299, Alpha Picks $499. You save $150. Now, say you just want a portfolio, that's Alpha Picks. And that's on the link tree too. Again, it goes 1, 2, 3. The bundle's the first one. Seeking Alpha Premium's the second one. Alpha Picks is the third one. Make sure you're picking which one you want. I would suggest the bundle. Before I was an affiliate, I was a paying customer. And that's the deal. We'll go over. Hunter writes to me, hey, I don't sell hard enough. I'm not a hard sell. I'm not. The reason I'm here is to give you tools and show you that I'm just a normal guy who retired at the age of 48 with a pretty decent sized portfolio. Yeah. And you can do it too. Again, make sure you have the tools. We'll go over a lot of this stuff, but I want to make sure you have the tools. Another one that we can draw trend lines on that I took out of the core portfolio is Boeing. And if we look at a monthly chart of Boeing, again, the longer the time frame on the chart, the better it is, the more sustainable it is. And I want to look at this. And if we look at a monthly, is this a monthly? No, this is a weekly. Okay, we're going to go to a weekly chart. And I'll post this in the newsletter. But if you look at a weekly chart and you go back to May, we're going to do a May 2020. So we're going to look at May 2020. Is it May 2020? Maybe it's May 2020. And you look at this one and we put that there. Where's the support level? look at, again, you want to touch at least 3 points. The more points it touches, the better. But if you were to look at this and we were to zoom in, where are you hanging out right now? And where are you potentially bouncing up? Right at that support level. Because we touched here. Okay, we touched here. So you've got at least 3, and then you touch 4. And this is a critical point for Boeing. Do you want to buy it? I would not buy a falling knife. Again, good companies with good management, with good products, with good earnings, those are things you want to buy. Right now, the management's in question here. And I'd rather see you buy when it hits that trend line here at 130 back in September 22. I'd rather see you buy at 150 and ride it all the way up to 221 than to buy it here where it's where it's just bouncing and see it go up a little bit and then just fall. Maybe we break down. Maybe we go back to that 119. So I'll post both of those charts in the newsletter. One that is an alpha pick is GM, and they're having their investor day. It's going to be interesting, and what I've noticed here is when I looked at GM earlier today, you can see the highs here back in. You know what? We're not going to post something. Let's look at a weekly chart of GM because this is an alpha pick. Okay, this is an alpha pick stock. When you sign up for alpha picks, you'll see in the portfolio GM's an alpha pick stock, and they picked it down in this area, I think. Okay, I think they're positive on it. I'm not quite sure. When you look at this and you look at the previous double top here, okay, this was September 2022 and this was February 2023. When it got there, it was right here. And that's at about $43. You're trading at $45 today, $46 pre-market. Okay, but where do I see some opportunities? The upside, I see this double top right here at about $50. It is using $50 as its resistance level. But I also see a double top from here that has the potential to bring it back to $65. So I think it's good. Let's go and look at some of the fundamentals of GM. Because while I hate this company, I don't think it's run well. They do have some points that could push it forward. And this investor day could be a big one. They're going to talk about EVs. They're going to talk about China. They're going to talk about other things that there is a union problem here. But this is an interesting one. The quant says it's a buy. Okay, it's been a strong buy since at 36, and you're at 45. That was just in December. So year to date, we can look at this one. The year to date, you're up 28%. 28%. If we go and look at it against the S&P is up year to date. It is up 19%. So you're outperforming the S&P with GM. Now, when we go and we look at Wall Street says it's a buy. They have a $55 price target, which, again, is 20% upside. So it's interesting. I think it's interesting. I think this one's interesting. It's an alpha pick. I trust alpha picks just based on that portfolio performance. And if you don't trust them, you're just not looking at the numbers. The numbers don't lie. 139% versus 38%. Again, the best thing to do for you to do that exact analysis that I just did, you need both. And so that's where that bundle comes in. Because you're able to look at both the fundamental, you're able to do your own research, but get the research from alpha picks as well. Now, one that I will say, AFRM. AFRM got an upgrade today. It's an interesting one. We'll go and look at the valuation, but this is interesting. Kind of like one of the reasons I have Roblox in the core portfolio is not because it's an amazing stock. It's not because, oh my God, I believe in the metaverse and I think it's going to be, the next biggest thing. It's because it trades in a pattern. And when you find that pattern, it's interesting to be able to trade a pattern, okay? AFRM falls into this because look at what pattern you've gotten. You've gotten these big spike ups. This is a lot of volatility. And if we go and we look at a weekly on AFRM, you don't even have a 200-day yet. But that 50-day is a very good indication of when you get under that 50-day, you can buy it. Because I do think that this one has a future. I don't think they're going away. I don't think they're going to declare bankruptcy. I do not use AFRM. When they give me the option of buying things at a payment plan, I don't use it. I know they're on Amazon. I don't understand how they're making money. They're down 21% year to date. The valuation is absolutely crazy. They're not making money. Mind you, they are not making money. The revenue growth, 46% year over year. The profitability, 42% gross profit margin, and all of these margins are down. They don't have pricing power, but momentum, which is the strongest force in the market. And you can see short-term momentum, 3 months, they're up 35%. 6 months, they're up 17%. Okay? Long-term, 1 year, they're up 115%. So when you take a look at this weekly chart and you say, okay, where can I trade this? I would be looking at this price right here as a potential high. Okay? $52. You're trading at $40 today. So you have that significant. Now, where am I going to set my stop losses? I'm going to set my stop losses probably at about 38, 39. I mean, I'm going to have those tight stop losses because I want the upside, but I don't want to hold on to this because there's a lot of downside to this one if it turns. But what do we see? We see the Bollinger Bands contracting right here. We see them expanding up. We see it pull back within the Bollinger Bands. Then you get a catalyst like an upgrade today. And where could it push to? Could push to 50. Again, good news is good news. This is going to be a catalyst for that. So I thought this was interesting. I should have this on the watch list so that we can scan for it. And we'll put it on the watch list right there in Trendspider. So if you're signed up through my Trendspider program, you've gotten my 4-hour algorithm, and you're following the daily stock pick watch list, you can scan on it now. Now, as far as crypto goes, MicroStrategy. You guys know I have MicroStrategy as my Bitcoin leveraged play. I've said it before that MicroStrategy is overpriced based on the price of its Bitcoin holdings. It's about 2 times leverage against the Bitcoin holdings. This was a great article, and the reason I point this out, MicroStrategy, recent numbers and the basic math show the tremendous value in this company. If you have MicroStrategy, if you're trading MicroStrategy, I would urge you to read this one. The reason is, this analyst recommended it here. They're up 10% March 14th. This analyst recommended it here, July. They're up 15%. This analyst recommended it here. They're up 42% since August 5th. That is an analyst that you want to follow. This is basically just hey, how does it work and why does the value there? It makes sense. Again, I'm holding this one. If you want to trade it, get Trendspider, get my 4-hour algorithm. Trading it. In fact, yesterday we got a buy at 189.19. You're at 186. Did I buy yesterday? No. Did I buy down here at 125? Yep, I bought down at that 125. So I've been adding to this one. They have their earnings coming up on October 30th. That's when they're going to announce that they bought a ton of Bitcoin under 60,000. And they're probably going to release a bunch of numbers and blah, blah, blah. The actual company makes no sense. It's hey, we're going to take our profits and we're going to buy Bitcoin. And Michael Saylor is going to take out some loans and he's going to buy Bitcoin. So why do you want my 4-hour algorithm? And the reason is because of the volatility of this. Over the last 24.6 months, you make 1,113% trading on 23 positions. So it's not even one position a month. Your average win, 45%. You win 48% of the time. So if you just bought and held, you're doing great at 800%. But I'm following the algorithm. And the reason I'm following the algorithm, because I think it does better and it provides me some safety from a huge downside. You see this huge run up here where you made 241% in the algorithm. I want to avoid that downside. So the algorithm is going to tell me it's going to take emotions out of it. Okay. And there's an article here. If you're invested in Mara, CleanSpark, Core, Riot, Iris Energy, any of the Bitcoin miners, how did the U.S. Bitcoin miners perform in September? Here's a chart for you. How did they perform against their August performance? If you're in the miners, I'm no longer in the miners. I have IBIT because I have direct Bitcoin exposure. You can trade those miners, but am I suggesting that you actually own the miners? No. I'm just suggesting that, hey, the miners have a business, and if they are making money in that business, then you can invest in them. If they're not making money in that business, don't invest in them. Just directly put money into Bitcoin. I've got IBIT and MicroStrategy. Those are the 2 Bitcoin plays that I have. Now, my 4-hour algorithm on this one, it just provides me an entry. It got you out here with a nice 6% gain. You can see last few times it's gotten you out with gains. Here's a nice 0.09% loss. It saved you from that turn from 34 down all the way to 30, and it got you back in at 32. So again, the 4-hour algorithm works on crypto. It works on all this stuff. Any stock that you put in there, it will work. It will find a strategy, and you can back test the results for as long as, I think it goes back like 7,000 candles, almost 7 years if you want. But that's where Trendspider comes into play. Now, Pepsi, they are in the core portfolio. They announced their earnings. It's lower after warning on subdued growth, geopolitical tensions. It's down about 1%. This is one that I've been warning about. The only reason I own Pepsi and Coke, not because they beat the S&P. It's because I drink Pepsi. And it's a good company. Again, do I think that, Pepsi is going to go to zero? No. I've held it. I bought a small position. It's grown to a decent position, but it's not money that I was using anywhere else. Puts off a decent dividend. My 4-hour algorithm loses you 2%. Over 24 months, you lose 0.3% on this one. So this is just a stability play. I probably shouldn't have it, but I drink Pepsi. I drink a ton of Pepsi. I don't anymore. Well, full disclosure, I don't drink a ton of Pepsi anymore. It's the mini cans, but I still buy it. And so my investment strategy has always been, if I use the product, I'm going to actually own the stock. And if it starts going up and it starts just building and building and outperforming the S&P, I'm going to add to it. If it doesn't outperform the S&P, but I still buy the product, I'm going to hold a small position. If I need the cash, I'm going to sell out of it if it's not performing. So that's how I manage my portfolio. You do you. Jared from Substack, when I talked about yesterday on the newsletter, if we go to the newsletter, over the weekend, I said, hey, I've got 5 stocks that I have on my watch list. Yesterday, I kind of said, hey, here's 10 stocks from the subscribers. Jared, ELF continues to slide. Let's see. ELF continues to slide after the most recent price target of cut to 150. I still think the stock is fundamentally strong as they continue to deliver earnings per share and revenue beats. Where do you see a technical support level for this? I'm trying to decide if I should get out and look to get back in at a lower price. I do want to be in this stock. Okay, so let's look at support level of 164. You've lost it. You've got a falling knife here. And I do believe that these are short sellers. I don't think that this is a fundamental problem with the stock. When you look at the short interest, it's 8.24%. That's a fairly raised short position. If you're looking to hold on to this stock, I would argue that this is the channel you're looking at. Unfortunately, I think that's the channel you're looking at. And where's the bottom? I think you're looking at 71. I think you're looking at it holding on to the 200-day. I don't think that you'll dip below that. But when you see this, okay, and here's where I want to kind of point out to you, Jared. When you're on a weekly chart and you see the Bollinger Bands contract, they didn't contract a ton. You had some confirmation up here. It was on the upside, but they were contracting. My guess would have been we would go up. Now, I would have said the second you lost that 9-day and you closed below that 9-day at about 170, you should have been out. Because there's no hope and pray is not a strategy. And when you have a MACD that high, it shouldn't be that low. Now, would I get out now at 101? Probably not. It's just too oversold. The volume is there. If you take a look at the volume is there. I think this is the short sellers. But I do think that you're looking at probably a $70 to $80 support level. Because the only thing that will bring this back up, it's going to be brought back up here to this 110 to 117. But because there are so many people holding at that level, then my guess is they're going to be selling. And they're going to say, oh, I'm finally back to even. I'm going to sell. That's the strategy of my market dynamics, of the psychology of this. Okay. Now, my algorithm makes you 61% over the last 2 years. Buying and holding makes you 173%. The key point of this is that the algorithm protects you, okay? It has you in here at 118. You're at 102, probably going to lose you a little bit more money. But, again, it protects you from that huge loss. Because, look, it got you out at 155. You could have decided to get back in at 118. There's no confirmation. The 50 days moving negative, the 200 days moving negative. I wouldn't have gotten you in at 118, but you were down here, MACD's crossing up. What we're seeing is a divergence, and not on the good side. You're seeing the MACD rise, but the actual price of the stock go down. So I'm not seeing a lot of, oh my God, rosy, my rose-colored glasses on this one. It's not overvalued. It's not. The valuation for their growth, their PEG ratio going forward, 1.73. That's not huge. That's not like, oh my God, it's overvalued. It is trading at 29 times future earnings. And when you've got Pepsi warning about the consumer going forward, it might be a little bit of an issue. So, but I don't see a support level other than maybe that 200-day on the weekly. And that would be where I would kind of put it, is on the weekly, you're at 75. I mean, you could use the daily and say that there's not even a support level down there. I just, honest to God, it's just an oversold stock. It's beaten up. Would I get rid of it? If you need the cash and it's money that you need in your portfolio, absolutely get rid of it. Cut your loser. If you don't need it, but you believe in the stock, because of its growth, hold on to it. I probably would, honest to God, hope and pray is not a strategy, but I don't think that it's completely overvalued. When you look at Wall Street, there's 16 analysts that cover it, 193. Now, I will tell you, they've chased it up. They're chasing it down. That's just the way that Wall Street works. They chase it up, they chase it down. When you look at their earnings, when you look at their earnings right here, look at this. This is their actual. Actual is the blue. Okay, you're right. Now they're expected to go down, but then they're expected to go up. So the expectations are there that they're going to go down. Maybe they come out with some craziness and you see a nice little spike where you can take some profits. But if you believe it, again, I got to have an Ulta because I'm a guy. I don't know beauty. I just don't know it. So Kevin, another question on another buy the dip candidate, AGX Argan. Let's see, AGX Argan. Argan, this is a stock. The algorithm makes you 49%. Buying and holding makes you 245%. It's been a skyrocketer. I give you that. AGX. Let's see what Kevin says. Seeking analysts, strong buy on Wall Street, higher dividend than peers, A+ for momentum. Nobody's talking about it. Anything I'm missing? Up 40% in 1 month. Thoughts, PEG and PE higher than peers, but another quarter like this, like the last, and it's no longer rich on valuation. Okay, so let's take a look at, is he missing any? That, first off, it's a small cap, 1.4 billion. So in my mind, I don't think that you're missing anything. I don't even know what they do. Let's see what they do. Engineering, procurement, construction, commissioning, maintenance, project development, and technical consulting services to the power generation market. So it's power, it's electrical, it's an industrial, doing well. Valuation, we can see valuation 34 times earnings, 25 times forward earnings, but the PEG going forward, 2.57. That's big. That 2.57 on their forecasted forward, that's big. I mean, that's their growth, unmatched, 48%. Sector's growing at 3%. Can't argue with that. Levered free cash flow up 196%. That's huge. Profitability, let's see if the profitability, gross margin, gross profit margin, 12%. They may not have pricing power. That may be the one bullet that I can find in this one. Their short interest, 1.75. So it's going up based on the valuation and based on earnings. But the one thing that I could find about them is their gross profit margin. Do they have pricing power? It looks like they may be undercutting the competition and maybe just getting in there. So you might have a turnaround on this one because it's up so much and because they can't price themselves and their growth just isn't there. Because the growth is a B-. It's not like their revenue's growing 48% year over year. So they're a small cap that's growing into this. They may be undercutting but their levered free cash flow growing at 196%. That's good. Now revisions, 2 up, 2 down. So when you look at this and it's only 2 analysts that are covering this, that's not, and their average price target is 82. Their average price target is 82 and it's at 108. So I would argue, yes, you want to buy it on a dip, but you also want to be aware of this chart where it's just out of control up. Okay, the support level that I would say for a pullback that I would want to buy it is 76. You can see it provided some resistance there around that point in time, but then it shot up. I wouldn't buy this above 76. I'd be waiting for, your RSI on a weekly is at 84. So yeah, you'd need a lot of pullback, not a 5% pullback for me to buy this one, Kevin. Again, I don't think that you're missing anything. I just think it's a small cap. It's gone parabolic. It's probably in that power generation kind of stuff. From Spotify, first off, thank you, Ryan, for being interested in my epic hikes. I will tell you, favorite backcountry hike. I listed some. You can follow me on all trails. I'm out there. I do some stuff. There was one in Spain that was epic, which I put the link in for you. That is epic. It is not known. It was just an epic, swinging bridges, waterfalls, like 3,000 feet in elevation. Nobody around, a state national park. It was awesome. The first part of it kind of sucked, kind of boring. Second part of it, absolutely epic. My favorite hike that I tell everybody that everybody should do at one point in their life is the Narrows, and that's in Zion Park. And that's because it's not super scary. Just make sure you have good shoes because you are hiking 4 to 5 miles in a river. But because it's an out and back kind of hike, you can go 1 mile in, you can go 2 miles in, you can go 3 miles in, you can go however long you want and just turn back. But the best description that I've heard about that one is it's like hiking on wet bowling balls. So be prepared. Just understand you can rent your shoes. You can rent, gaiters, whatever you need at the entrance. It is one hike that I would say everybody in the United States should probably travel to Zion National Park and do that one. That would be my thing. Now, Robert Banyai, what's your thoughts on CCL? This is Carnival Cruise Lines. I will tell you, one of my friends asked me about Carnival a few months ago, and I said, buy Royal Caribbean. I said, I'm not in the cruise space. I don't enjoy cruising. I will tell you that Royal Caribbean is an alpha pick. Carnival, they chose it over Carnival Cruise, and the analysis of it was spot on. I won't do their analysis. I'll do my own analysis. But if you're interested, Robert, Alpha Picks has a full, complete analysis of Royal Caribbean when they chose it. And we'll take a look at Carnival right here. Okay, Carnival algorithm makes you 222% versus buying and holding at 116%. It has you out. It's on its way back up. Probably will get you in the next couple of days, maybe even tomorrow. But do I want to get into this one? Now, we look at a weekly, and you're seeing ever since the pandemic, it just hasn't come back. And what I know about this one is it's the debt, okay? It's the debt, and it's the financials. They make $24 million trailing 12 months. That's great. Total revenues. Gross profit, $12 million. But they have a ton of debt. This is going to benefit them when rates go down. Now, their short interest, 7.34. That's pretty decent size. The valuation's not crazy. It's a strong buy in the quant. Wall Street says it's a buy. Their price target, 24. That's 30% upside. So I don't think it's hard. You can't get on these cruise lines. Again, you can't get on these cruise lines. My parents had to book out like a year and a half for a freaking cruise. I think it's Norwegian is what they're going on. But Royal Caribbean, when you take a look at this and you chart it against Royal Caribbean, we're going to select symbols and we're going to say RCL. We're going to do Royal Caribbean. And we'll leave the S&P in there. Why not? Let's look, and we'll select metrics. Performance, we're going to go total return because I'm not sure if either one of them has a dividend or not. But 1 year, Royal Caribbean's up 106%. Carnival's up 42%. You'd have to convince me with more, what's your opinion on Carnival? You'd have to convince me that Royal Caribbean is due for a pullback and that Carnival has the growth prospect in it. Because long term, you can see Royal Caribbean outperforms Carnival Cruise Line. 5 year. You can see it. It just outperforms Carnival Cruise Lines. So you'd have to convince me that it's worth it. Now, I will include it in the newsletter as well. Henry wrote me a great email. He's a salesperson. He says, I don't sell hard enough, blah, 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 blah. One thing I noticed time and again with social media investors is that they're often trying to sell you something or sway my mindset towards the latest topic. I'm very aware of this because I work in sales and project management myself, but most of the time you just focus on talking about things that make sense, valuations, price swings, blah, blah, blah. He said, recently you mentioned Palantir, the careful consideration of buying at 40, which just makes sense when looking at risk-reward scenario and thinking ahead. I sold my Palantir at $40.15 because holding on to it wasn't worth risking the gain for me. Anyway, I just want to say I appreciate it. P.S. to those who complain about your podcast, they clearly don't understand the value or just don't listen hard enough. Yes, I tend to agree, Henry. Thank you. Palantir, I found this article, is their upside. And this person lowered their rating from strong buy to buy. And they had a strong buy back here. And the reason is the valuation. And that's it. But what I told Henry, my advice for Palantir is kind of like it was for SMCI. You want to get to a position where your portfolio position is 100% profit. Because if you're at 100% profit, then, Hunter's here. If you're 100, no, I'm sorry, it's Henry. Henry was who wrote me. But if you're at 100% profit, even if the stock goes to zero, you haven't lost anything because you made that as profit. So make sure that taxes are involved in that and you can do the calculation yourself. But I would say trim Palantir because you don't want to get rid of Palantir just because it's up that high. Well, you want to continue to hold your winners. So I would say when you get to 40, rather than sell out of your position, trim it. You seem very analytical. So I would say trim it. Take 10% off when it gets to 40. If it dips down below, sell 20%. And then when it dips to an area where it's showing strength again, like this just shows on a weekly, it's trading at the very top of the Bollinger Band. Its RSI is at 75. The MACD is 3 or 4 points above the oscillator. We just got a 200-day. Guess where the 200-day is at? $17. So it's super high up there. But you don't want to just throw out the baby with the bathwater. You want to make sure that you have some type of ability to continue to grow with this stock. So I would say trim rather than sell out, even though I tend to agree with you. The valuation, that makes no sense. I think it's good. Now, earnings coming up this week. We got Delta Thursday, Domino's Pizza on Thursday, JP Morgan and the banks really kick it off on Friday. But that's the earnings season. I'm going to go directly into scans, and we got CrowdStrike. We got a bunch. There is one that I want to bring up, and it's YINN and YANG. Okay, YINN is this is the China bull. This is the one that has gone crazy. It's gone absolutely nuts. For any degenerate out there, this is one you want to keep an eye on. You know why? Because my algorithm makes you 116% versus 39% with just buy and hold. That's over 2 years, 34 positions. Yes, it trades a lot. But when you get a winner, you get a big winner. Look at that, 40%. You only win 26% of the time. You lose 74% of the time. But the algorithm does seem to make you money because for the degenerates in the world, this is one that you want. Now, it was clear. We were just way too high. The expectations had gone way too parabolic. You can even see from a weekly on here, it has, this is a decaying asset. So don't expect to buy and hold this one. Although, is it one of those TQQQs where it could just, continue up because it's been beaten down for so long? But I'll argue that. Now, it is down 30% today. That's YINN. The inverse, which is Yang, is up 35% today. Okay, Yang is up 35% today. Now, the algorithm didn't get you in. It didn't get you in. It's up 35%. I would argue that gap between $3.21 and $3.60 gets filled. So that $3.61, if you want a nice 10% or something, throw $100 into this. I may buy it on Webull right now. But again, this is a triple leverage DTF against China. It overwhelmingly will lose you money because betting against the markets just ultimately loses you money. No matter how much you want a stock to go down, it will ultimately go up. Unless you've got a stock that just is going to zero. But you've got a couple of gaps here, 458, 531, and then you've got another gap, 585 up to 694. You've got gaps to fill. This one's too low. Again, bad news out of China. You're already up 35% today. Doesn't mean that you can't go up more. You opened up at 322. You're trading at 323. It's kind of level setting itself. Again, because China trades overnight and all that new stuff. But I do think this was interesting. You got CrowdStrike. You got ARK, MongoDB. We talked about one that I have on my list that if it pulled back 5%, I would want to buy it. AppLovin gets another entry. The original entry at 97. This is a great entry right there. That was just on September 12th. September 12th. This one, the algorithm makes you 502% over 24 months. Average win 22%. Again, AppLovin has another leg up. You're trading at the look. The Bollinger Band cinched up here. You're trading at the top of the Bollinger Band. Do you have another? This is at all-time highs. We've lost it. We've moved past that. Okay, AppLovin is one that I had on my list. If it pulls back 5%, right now it's up 0.74. Okay, it got another leg up. If you have any questions, I've gone on long enough. An hour. If you have any questions, hit me up. Remember everything. And again, when I say buy on Webull, sign up for Webull. Trade those triple leverage ETFs with $500, $200. If you have a smaller account, or you don't have enough money to pay the rent, do not throw money into Webull and think you're going to make your money. It's gambling. I had put $1,000 into Webull a couple of years ago, and I'll tell you what I'm at right now. I am at $89.47, so almost $9,000. 89, and it's mostly MicroStrategy, iBit, Apple. I've got Google in there. I've had TQQQ. I've got Tesla in there. It's not options. I've got Berkshire where I'm down 3% because I bought for Warren, but I bought one share. So, I'm down $14. Big deal. I've got Google in there. I'm up $17. So it's small positions. Apple, I'm up $140. It's not a lot. I've got a big cash position because I generally get in and out of a lot of things. Out of the $9,000, I've got $2,500 in cash right now. A lot of it is in the two biggest positions, Nvidia and iBit. So again, these are things that I just, I take that $1,000 and I just started building it, and I added to the winners, took out the losers, started using my 4-hour algorithm. But again, it's Webull. It took the place of my stock betting. If you have any questions, hit me up. I'm on there. Hopefully you enjoyed this episode. I'll talk to you tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.